Hello and welcome to this Forex Preview at xm.com. We'll be discussing the upcoming US inflation report and the potential reaction in the dollar. I'm Maria Pachortiz, and joining me is lead investment analyst Rafi Boyadjian. So Rafi, the US CPI report for June will be out on Wednesday. What are the forecasts for the headline and core rates, and how are they likely to impact the Fed's next moves? Is more tightening on the horizon?
Well, Maria, it's definitely going to be a very important and a very interesting report because, of course, we're approaching the July FOMC decision. Now, we know that inflation in the US is coming down. The question, which really, this has been the question for some time now, is the inflation coming down fast enough, or specifically, is it coming down fast enough for the Fed as far as its tightening plan is concerned? So the forecasts do suggest that we should see a further decline in both the headline and CPI rate. The headline rate is expected to come down to 3.1%, which would be the lowest in more than 2 years. Now the core figure, that's expected to edge down to 5%. Again, that's a reasonable decline from 5.3% in May. But the question is that going to be good enough for the Fed? Because the Fed, of course, has a 2% inflation target, and until it sees inflation getting, at least the core measure, getting closer to 2%, they're not going to consider that their job in terms of tightening is done. And, there are concerns about sticky inflation, particularly if we have a look at the core PCE price index, which the Fed does attach more weight to. That's been stuck between 4.6 to 4.7% since the end of last year and hasn't really budged. So clearly, should we see now some actual progress in the core figures coming down more substantially, then that, of course, would be good news for the Fed.
So if the CPI data does increase the likelihood of the Fed hiking rates in July, what reaction can we expect in the dollar? And what's the longer-term outlook for the greenback?
Well, we actually saw the dollar edge lower because we did get a soft, if you can call it a soft jobs report. And of course, that is another thing that's kind of complicating the outlook, because we are seeing some signs that the labor market is perhaps cooling off. At the very least, hiring is slowing down. But at the end of the day, the labor market is very tight. The jobless rate is at multi-decade lows, and wage growth, in fact, surprised to the upside. So should we get a stronger than expected CPI report on Wednesday, then we could see Fed rate high expectations being ratcheted up by the markets for the time being. The July rate hike is not fully priced in, so clearly there is scope for some significant upside for the greenback should we see a strong set of CPI numbers. Now, as far as the longer-term outlook is concerned, I think what's happening right now is the picture kind of becoming a little bit more muddled, because we are seeing some divergence in the pace of monetary tightening. Now, of course, on the one extreme, we've got the Bank of Japan, the yen, which the Bank of Japan hasn't even started tightening yet. So clearly the yen has no prospect of gaining against the dollar unless something changes with the BOJ. But if you look at other central banks, for example, the pound is less at risk against the dollar because we're certain to get a lot more rate increases from the Bank of England. But the ECB, they could in fact be done soon, because the inflation in the euro area is coming down quite fast too now, and the economy is slowing even more than the US. So even in the event that we get a weaker than expected CPI report this week, then in the longer term, there's still a good chance that rate cut expectations for the Fed for next year will still gradually be priced out. And that means that the euro, even if it does well after a weak US CPI report, its longer-term prospects are it's kind of uncertain. It's all going to come down to what also is going to happen in the euro area.
Rafi, thanks so much. And thanks for joining us for this Forex Preview at xm.com.